Bitcoin pushed higher exactly as we predicted in the last video, but it didn't hit my short area and now it's starting to look weak. I think we just entered the hardest part of the cycle, and over the next 60 days, most people are going to lose money because they are going to make the wrong decision and miss the bottom. That's why I made an important change to my DCA strategy, and if you don't want to miss the bottom, you should probably too. So let's get into it. Now, last video I made it clear that none of the patterns we are watching were invalidated and that I was expecting higher. We did push higher all the way to 67k, but we didn't reach my short area and it's already starting to turn. So now we have to ask ourselves, do we keep waiting for the short to get triggered? Do we jump into shorts here and now? Or do we drop that short idea completely and just accept that the bear market is over and we only go higher from here? The answer isn't as obvious as it looks. One chart didn't change at all and another one is actually starting to worry me, so let's have a look. Now let's start with the inverse head and shoulders pattern. Would you say anything changed here? Last video I said as long as we hold the neckline, the pattern stays valid. We did push higher and now we have dropped again, but the line in the sand right now is around 63,000 and I want you to remember this number. Because if we look at the rising channel, we are also still inside it. We did not invalidate it yet. But look at this. We have tested that support band 5 times now. It is right now exactly at 63,000 again, where also the 200 week moving average is sitting. And when a support gets tested that many times, what happens to it? It gets weaker. And we are getting dangerously close to the invalidation of this whole rally. So this is concerning. But we are not there yet, and getting back to the original question, did anything actually change? No, but we do have a problem. Short term, nothing changed so far and we can still reach higher towards my short trigger around 68k. Maybe even tap the 200-day moving average around 71k. But our biggest problem right now is not the war that is picking up, it is time. Based on the 4-year cycle, the bottom should be around October. That's only 60 days from here. Like I showed you in the previous video, August in midterm years tends to be a red month, and that's only 6 days away. But what really concerns me lately is something else. I don't want to be naive and think I'm the only one watching these timelines. By now, most people are waiting for the bottom in October. This alone should be a warning sign for us. Because when everyone else is thinking the bottom is going to be at a specific date, how likely is it that it's actually going to be there? But if the bottom is not in October, is it maybe already in? If Bitcoin just does what it's always doing, July will close green and August and September maybe come in red. This is still my base case, but I don't want to be in the same boat like everyone else and wait for the October bottom. But I also don't want to be in the same boat with all these people calling for the bottom is in. Right now there is nothing supporting the end of a bear market and there is no change of character here. So if we don't want to be in the boat that waits for October and the boat that is calling for the bottom, what can we do? In my opinion, there's really just one thing we can do. As I said in the beginning, I changed my DCA strategy and I no longer wait for 54k to get hit. If you remember, our first spot target got triggered at 59k. I bought 20% there and later added another 10%. So now my spot allocation is at 30% and my old plan was to sit and hope for 54k to get hit and then deploy the rest of my capital at once. But that's exactly what everyone is now planning to do. So instead I'm going to buy Bitcoin on a daily basis. But we need to be very specific here. If the bottom really is in 60 days, that gives us 60 days of a run rate to buy. So the plan for me is to buy 1% a day for the next 60 days. So when we get to October, I will be allocated around 90%. And with that, I will probably have a better average buy than most people in this market. Of course, you don't need to do exactly 1%. Somewhere between 1 to 3% is also good. You should really base it on how much spot you already bought. So this approach gives us around 60 days, but it will be likely less because if we see a bigger drop for whatever reason, I will buy more aggressive the lower we go and I will buy less aggressive if we push higher or stay sideways. I think with this strategy, we completely eliminate the hope for a bottom. We are not trying to time October and we are taking away that psychological stress, which will be the exact reason why most people will lose money in the next 60 days. So yeah, that's the plan for the spot buy, but we also need a plan for leverage positions. I am actually interested in a 2 or 3x low leverage swing long position, one I can hold for at least a couple of years. But for this kind of trade, I really need the prices to be much lower. If I start that position here already and we do get the absolute worst case below 50k, that would be unnecessarily painful. But if we reach my initial target of 54k, I think that level, if we get it, is probably the best level to start a low leverage swing long position. So this would be my plan for a leverage play I am also very interested in. So let's summarize. Nothing actually has changed yet. The patterns are still valid. We can still move higher from here towards my short trigger, but we are running out of time. That's why I changed my spot strategy to a 1% daily purchase. But for a leverage swing long position, I need lower prices. So I'm sticking to the plan, and of course, all of this is not financial advice. If you found this video helpful in any way, don't forget to like and subscribe. As always, thanks for watching, trade safe, and I see you in the next one.